Hi everybody, and welcome back to video number 2 in chapter 3 alpha. I realize that I'm going a little fast in this video, but of course, being a video, you can always stop it and return and go through it a little bit so you pick up all the subtleties of what I have gone through. So I hope that's helpful to you. Okay, so here we're continuing on with the Sapphire Company example, and we're using the information generated on the previous slide to prepare the cost of goods manufactured. Now, the cost of goods manufactured represents those costs incurred in work in process inventory on completed jobs. So we start out with here is our beginning raw materials inventory. We add the purchases. That gives us the total raw materials available. We back out our ending raw materials inventory, and that gives us what we transferred into production for use. Okay? Now, that's all of the raw materials inventory. There are two pieces of that. We have indirect materials, which are 70,000, and so if we deduct that out, that $8,000, that leaves us 70,000 of direct materials that were used in production. Okay, so then we have our direct labor, which was $68,000, and that which we applied to jobs, which was that $102,500. That gave us our total manufacturing costs of $240,500. But that's not the cost of goods manufactured. Those are very, very easily confused terms. Here we have the cost of goods manufactured. Here's the total manufacturing costs. So we add to that the beginning work in process inventory, and that gives us $245,500. And we back out our ending work in process inventory of $10,500, and that gives us what we actually completed in work in process inventory and will and have transferred that to finished goods. Okay, so now we'll take a look at a schedule of cost of goods sold. For here, we need to go into our finished goods inventory. So our beginning finished goods inventory was $13,000. We added that $235,000 that we just calculated in the previous slide, and that gives us the cost of goods available for sale. We back out the ending finished goods inventory, and that gives us our unadjusted cost of goods sold. But you'll remember that we had some over-applied overhead, and that subtracts from cost of goods sold. Now, had it been under-applied overhead, we would add that to cost of goods sold. And this gives us the adjusted cost of goods sold that would appear on our income statement. Okay, I think that's pretty straightforward. Now, our income statement, you'll notice here's that $239,300, and as I mentioned, it hits the income statement here. Our sales pretty straightforward given in the problem, so our gross profit or gross margin is $80,700. Now, these are the product costs up here under cost of goods sold. We also have our period costs. We had salaries expense and depreciation expense, advertising expense, and insurance expense for selling and administrating. All of these would be, right? And that's $52,200. So our net operating income is $28,500. There might be some non-operating income or expenses, which will get us to profit before tax. and then we would go from profit before tax. We would subtract out our taxes to get to profit after tax, which would be net income. Okay, well, that finishes chapter 3 alpha. And when we return, we'll take a look at chapter 4. Until that time, bye for now.